Good morning everybody and welcome to this European session on Thursday the 12th of September. Hope you're all well, having an incredible week in trading the financial markets. It's been a really good week so far. We have been highlighting that, look, we are in a bit of a reversal territory. Some of the big themes in the US dollar, the big trends to the downside, big trends on the Swiss pairs, the yen pairs. We highlighted probably coming to an end, not just from technical levels on charts, but also the shift from the anticipation of different news announcements to now actually the reality of news announcements coming out, and the shift in focus from the market in dealing with these fundamental economic announcements. So we've been dealing with more sort of trend reversals and more range-based trading, and we've been adapting to the sort of lower volatility that has developed. So still net up for the week from these webinars that we've been doing every single day, and I'm sure you guys will be smashing it out of the park through your other live trading webinars throughout the day as well. So we keep the focus, we keep the discipline, we keep the patience, we keep it going every single day, and we listen to what the market tells us to do and make sure we risk manage our trading account appropriately. So let's have a look at some of the big themes affecting the markets today and highlight some potential trading opportunities from the London and Sydney trading floors. First up, we have the all-important European Central Bank interest rate decision today at 1:15 p.m. British Summer Time, UK time. So 6 members of the ECB Executive Board and 15 of the 19 governors of the Euro area central banks vote on where to set the interest rate. The split votes are not revealed. We just know what the overall outcome is of the vote, but we don't know how each individual person has voted. And any split votes like we do when the Bank of England report their interest rate decision. Now, it is widely expected interest rates will be cut from 4.25% to 3.65%. So as we already know, as you've been attending all these different webinars, we know that most things are priced in, all right? Because that's why institutions, they have hired thousands of analysts all across the globe to analyze data, economic data on where markets could be in the future. It gives trading desks time to build positions in anticipation of future events. Okay, so just understanding how the market works, of course, you'll work from day one of Learn Forex. Okay, so we know everything is already priced in, and that gives us the confidence then in trading different trends with a fundamentally led narrative. So whilst everything is priced in, we want to look for surprises, okay, any big surprises in what everyone was expecting. This is where we can get the bigger moves in the market, and then we want to trade the follow through, all right? Now, the key focus here is actually going to be an ECB press conference half an hour later at 1:45 p.m. British Summer Time. And that press conference, the first part is a prepared statement that's just read out from the ECB president. Then it's open to questions from the press, and because that section is unscripted, it can lead to heavy market volatility, because of course press will be asking questions on, okay, well, where do you see the economy moving forward in the future, and where do you see interest rates moving in the future? Are there going to be more cuts, bigger cuts? So it's that press conference, it's the unscripted part where we can get some really big moves developing in the market. So be mindful of that when you're trading around that session and the US session, because there's also some high impact US news announcements coming out around the same time as well. So mainly for you really fast time frame intraday traders, just be mindful of that volatility, all right? Of course, if there's any opportunities highlighted from any big moves in the euro that are unexpected, I'll do my very best to highlight those opportunities in these webinars, but make sure you're tuning into all the other live daily trading webinars throughout the day to also capitalize on those trading opportunities. Okay, so we've also had a release from Goldman Sachs, who now sees sequential rate cuts from the Bank of England. So there was a poll from 65 economists polled by Reuters, and 49 of those 65 economists actually expect at least one interest rate cut this year. Now, 16 of those economists expected 2 interest rate cuts this year. This is why as retail traders, we don't try to guess what's going to happen on a news announcement, all right? We don't try to predict those things because look, 65 economists who basically analyze all that data for a living, right? Monday to Friday, 9 to 5, they still can't agree on what the Bank of England is going to do. So this is good because, you know, this is what builds anticipation in the market, and then when there's some surprises, this is where we can get those big moves. If we understand these things, then we can try to capitalize on them. Okay, obviously we can't capitalize on every single move developing in the market, but you know, we want to be putting this into our trading toolbox. Okay, now the investment bank Goldman Sachs is one of those 16, and they're expecting back-to-back interest rate cuts in November and then also December. Now, traders are already pricing in around 49 basis points of interest rate cuts for the year, but the odds are showing around a 78% chance of no changes next week. All right, so remember, next week we've got the Bank of England interest rate statement, but it's expected there's going to be no changes there, and maybe the changes are going to come in November and December. And we did highlight this about a month ago that we will keep an eye on the British pound, okay? But right now the focus has been on the US dollar and also the euro, okay, and also the Canadian dollar, because these central banks then use their announcements and interest rate cut announcements have been literally this month. Okay, so that's where the focus has actually been. But we'll keep an eye on any opportunities developing on the British pound and see if there's anything going on. I mean, this week we've had a bit of weakness in the British pound because we had a very disappointing GDP announcement where basically it shows the UK economy is flatlining, 0.0% growth last month, whereas the market analysts were expecting a 0.2% growth. So, you know, the UK showing signs of a very weakening economy. So this interest rate announcement is why there's a bit of a difference, okay, in economists, because they're believing, oh, the Bank of England, they're looking at that data, right? It looks pretty weak. They're going to have to cut interest rates at least twice, right, to stimulate the economy. So again, everyone has that kind of difference of opinion, but we'll track the price action on the British pound, and if we get all those pairs moving in the same direction, then we know there's a fundamentally led narrative behind the move, and then we'll start to look for those opportunities based around that. For now, let's dive into smart charts and have a look at any potential trading opportunities developing in the market. Okay, so far this week we've closed a few trades in profit and to deal with the volatility of the different news announcements, and we still have some trades that are running as well, which are, you may have noticed if you have been trading that maybe some of your trades taking a little bit longer maybe to get to your target levels, because of course the volatility market is a bit lower right now because we're dealing with trend changes and we're dealing with these high impact news announcements, a bit of a different environment than, let's say, maybe August and July, all right? But that's okay because we focus on what the market tells us to do. We understand the market will change. Sometimes it's really fast paced, sometimes it's slow paced, sometimes it will be in different conditions. So this is why we look to trade multiple strategies and time frames so we can adapt to what the market is actually telling us to do. So one opportunity that's been highlighted through the London and Sydney trading floors here is actually euro against the New Zealand dollar here on the interbank radar strategy, and there's some interesting things going on here. First of all, on top of what smart charts is actually found for us, and remember, we use the benefit of algorithmic technology, AI technology, to help filter the market throughout the day. And then the real sweet spot is adding in a little bit more human analysis and discretion as well. Basically, this is where we get the combination of leading and lagging tools and evidence, and that's how we trade, all right? So on top of what smart charts are looking for, there's some interesting structures here unfolding as well. And what you can see is we've got some bigger cycle formations developing here, with these big turning points getting lower, all right? Creating that low, creating that lower low, creating that high, creating that lower high, giving us evidence of institutional speculators selling at high prices, but also willing to keep selling beyond low prices, all right? This is just a bigger version of like this trend here, basically, which we had to the downside, all right? And you can see obviously the volatility, the cycles here have just got a lot bigger, okay? But we're sort of in this trend change right now, aren't we? Where now we're pushing lower. So we have signs of sellers in control of the market. We also like the fact that if you look at the moving averages on the chart, so let me just zoom out a little bit here, they tell us a bit of a story, don't they? Because look, price got above the moving average zone, it bounced off and buyers turned up. Came into the moving average zone, bounced off and buyers turned up. Came into the moving average zone, bounced off, buyers turned up, but not enough to get above the high point. Already leading evidence, not enough buyers left in the market. Because there's no buyers left in the market, what happened when it came back down? It broke through that low point. So already that double top formation, we call it, failure of buyers making a higher high cycle, give you leading evidence that there's no buyers left, maybe sellers could turn up. When we get the lower low cycle there, now that becomes very interesting, because now we know sellers are in control of the market, comes into moving average zone, sellers turn up here, and then we get this trend that has been developing. Quite strong trend, which didn't come to these moving averages, but if you went to more of a momentum strategy like the phase change or T-wave, then you'll be trading those as well. And then what happened here? Okay, sellers turned up here, but look, not enough of them to get below this low point here, and the trend changed. Now we have a higher low, we have this higher high. So we know buyers are in control of the market. Lo and behold, it comes into those moving averages, and what happens? Buyers turn up here, they drive the market to a new high, comes back into the moving averages zone, buyers turn up, drive the market to a new high, and what happens? It comes all the way back down to this low point. So now we're neutral, okay, because those buyers, there was a lot of buying, but a massive amount of profit taking has driven it all the way to this low point. So now we're flat, we're neutral, we don't know who's in control of the market. Buyers do try to drive the market higher, but look, they never really get above the high point, and it comes back down to this low point. What do we now have? A head and shoulders pattern, okay? So very common chart pattern where basically you have the left shoulder here, you have the head over here, and you have the right shoulder over here. It's a bearish pattern, so that when price breaks through the neckline, then we know that sellers will take control of the market, okay? So this is obviously where then you'll go down to your lower time frame strategies, your 20 bounces, your pip runners, and you'll trade that sell-off, all right? And now what do we have? We have price coming back into the moving average zone. So who knows? Maybe more sellers are going to turn up here and we get a trend developing. All right. So from a cycle structure perspective, we've got some interesting things developing here on this currency pair on the daily charts. We also like the fact that the stochastic is not just an oversold territory, but we have this continuation divergence, okay? And that's actually why we're looking at this. Mark Charles has actually found that for us, by the way, using very clever algorithmic technology. So what we have here is that lower high cycle formation, okay, but you can see the stochastic is higher. So we have this continuation, we call it continuation divergence, okay? This price is more oversold than it was here historically, but we are actually lower than we were before, so it's a bearish sign, okay? So what you'll notice is on the far left hand side we have the opposite situation. You can see that price was high at this point in time, but you can see the stochastic there was actually lower. So this is like an example of a bullish divergence. This is an example of a bearish divergence, okay? Or bullish continuation divergence here, bearish continuation divergence here. So we've got a couple of things, confluence of areas developing at this point in time. So it becomes compelling to see if sellers are going to turn up here, okay, and if we get some continuation developing. And not only do smart charts help to highlight these potential trading opportunities, but also do the really important work, which is risk management. Because if we click the sell icon, smart charts will populate an entry price of the blue dot, stop loss of the red dot, target the green dot. It will do all the percentage risk calculations for you as well. These can all be adjusted accordingly to your own user preferences, and then we can also set an expiry. On this particular strategy, I like to set a current bar close expiry, so you can decline or accept the trade at the bottom. And basically what that expiry says is, look, if sellers don't turn up here and continue this downtrend, just cancel the pending order. We didn't win, we didn't lose, didn't cost us anything, because we don't know if sellers are going to turn up. We don't know if buyers are going to turn up. No one can predict the future. We just need to be prepared that, look, if buyers or sellers do turn up at this point in time and drive it in this particular direction, we want to be ready and waiting to try and capitalize on that, right? But if they don't, pending trade expires. If they do, but not enough of them turn up and continue to move, then we've got our stop loss there to risk protect us, all right? So risk management, absolutely essential, okay? Making sure that you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month, all right? Okay, so make sure you're tuning into live daily trading webinars as well and see how to trade through the European Central Bank news announcement coming out later on and the volatility that does develop there. In the meantime, that's it from me. All the best for your trading. I'll see you next time.